Hey everybody, this is Jim at SP500chart.com. It is September 18th at 4:15 here in the afternoon on the East Coast. Before we look at the chart, I need to remind you that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I control lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's do just that. Well, I think you can sort of read my mind, and that is, it looks to me like we're really trying to put some pressure here on this neckline. This is an hourly chart that goes back all the way to July and June. But the area that I'm really most profoundly interested in is from July 7th to today. And just in case you have not been with the site for a while, or if you haven't checked in maybe in a week or two, we're looking at a potential inverted head and shoulders pattern. Interesting to note that we had a smaller inverted head and shoulders down here, that in an area that makes up the inverted head of the larger pattern. So let's describe where this pattern is. Well, we've got a left shoulder that formed right here. We have a head that is a little fuzzy on the right side. Okay, it's hard for me to say for sure whether we should call this the head, the end of the formation of the head. That's what I'm doing, and the reason is pretty simple, because that's really where we get that first reactive move before we break our little channel here. And then over on the right side of the chart, we have what would be the right shoulder. Now, these patterns usually or often tend towards symmetry, meaning if we spent 3 weeks forming the left shoulder, we usually spend about 3 weeks forming the right shoulder. That's why this, I think, may be a little fuzzy, because you can see we had that two tiny little attempts to break out over this neckline that didn't work. So it may be that we're actually looking at a shoulder development that's a little bit separate from this mishmash back here. Regardless, even if we don't get symmetry, this is still the neckline, or something very, very close to it. So today, if we zoom in, before we zoom in, let me just, to keep from cluttering up the chart, let me get rid of these three little circles. By the way, what is an inverted head and shoulders pattern? Well, you often see them at market bottoms. As a matter of fact, we had a very large one back here at the very bottom of the market, back in that actually formed from the fall of 2008 and did not break out until summer of 2009. This was a beautifully formed inverted head and shoulders pattern, and I'll be honest with you, it was when I saw that pattern develop, before it ever broke out, that I said, by golly, in retrospect, in all honesty, by golly, 666 is the bottom. Where did I think the top would be? I didn't really know at the time. I knew that this pattern by itself pointed to a minimum target of about 1340 to 1350. And that was actually met back in 2011. But we're where we are now, and we're dealing with a much smaller pattern. As a matter of fact, if you look at the chart, everything is kind of getting squeezed as we go up. That concerns me. We'll talk about that more later. just be sure to check in. So we're looking at this inverted head and shoulders pattern, which, like I said, they usually form at bottoms. They also form as consolidations. This one formed as a very short-term bottom. The whole thing, however, if it pans out, will have formed as a consolidation, and we have seen this before in the S&P. This wouldn't be anything new. So, but what takes place in the pattern? Well, the first thing that happens is you have a left shoulder where you first encounter some selling pressure. You then have a head, which is where the selling pressure picks up even more. And what is taking place here, generally speaking, is shares are being turned over. The people that sold in this little area right here pretty much were the weak hands. And they thought, oh no, I better get out here because this is the market top over here. Well, as you can see now, that ain't so. As a matter of fact, these same people that sold back here, that created that downward momentum that took us down to about 1904, those same people are likely the folks who are going to buy once we get over this neckline. Okay, just a day late and a dollar short. Retail doesn't tend to play it right. And I'll be honest with you, I'm like them. I feel the same stuff going on in me as far as the way I feel about things. If I do what I feel, I can make a pretty bad mistake in the markets. If I do what presents itself on a chart, I tend to do much, much better. So anyway, this is where we are at the end of the day. We're looking at putting pressure on this neckline, and the sucker could go at any minute. You'll remember that for a number of days we had identified this little downward channel between these light green lines, and I mentioned that once we get over this channel that should mount the charge on attacking this neckline. And I don't want to toot my horn too loudly, because if I do, one of these days it's going to sound a sour note. But that proved to be exactly what we're looking at now. The second part of that video where I mentioned that, and I've mentioned it a few times, but the second part of the analysis is getting over this neckline should produce a move to about 2100 to 2110. Now, what makes that really interesting, and this is probably more material for if and when we get over that neckline, but what makes that really interesting is doing that target and getting to that target in a typical time frame. And when I say typical, I mean usually when you get up out of these patterns, you get up and go. Getting to that target in a typical time frame would mean we would have to take out some resistance lines right here. If we indeed take those resistance lines out, that could sound some alarm bells, because taking out rising resistance is sometimes, at least for the intermediate sense, sometimes foretells a little irrational exuberance. And it could be the sign of an intermediate top forming. If we don't take out those, then our target would have to be met sometime in very late December or early January. And if we do that, that's fine too, okay? If we do that, that becomes a fairly easy short opportunity, because we would have come up to these lines that every time we've come up to them before, they've tended to produce a sell-off. But for now, I think the attention rightly should be on this inverted head and shoulders pattern and this neckline, because it looks to me like this is what's in play right now. This still showing resistance, but if it breaks, then at some point in time, in the not too distant future, we should be looking at that move to 2100 to 2110. So guys, there's your video. Can we find anything else on this chart to mention? You know, you can just see that resistance there. You can see it. It's not exactly on the neckline, but to be honest with you, the neckline may not be exactly in the right place. This may be the neckline, but it's close enough. You can just see that resistance, and you can also see how each attempt at it produced a little bit less of a return back on the sell side. So it looks like this thing could be ready to go. So let's keep our fingers crossed, see if maybe we break out over that tomorrow. That would certainly be nice. One thing that is for sure nice is you lending me your ear and you supporting the website. I really do appreciate that. So let's stick through this together, see what the future holds. Thanks again for watching. Take care.